Well, good morning. Seems like it's 11 a.m. Eastern. For those of you on the West Coast, it should be 8 a.m. Pacific. This is Tom Asprey. Thank you for joining me today. The goals of today's sessions are pretty simple. I just want to show you, using two free platforms, how you can set up the indicators that I use in my publications and in my analysis. These are two best sites I found to do this, both of which have paid versions, and those have some added conveniences that I'll explain as we go along. I have no financial relationship with any of the sites, though two of my oldest friends in the business, John Murphy and Greg Morris, are part owners of Stock Charts. That's about the only relationship I have. So I will be taking questions. I'll look in the chat. There's a chat box. If you have questions in the first section, I'll stop for a few minutes and see what questions there are, and then move on to the next one using free stock charts. All right, let's get started. This is the typical you'll see in stock charts if you don't have an account. So we'll look at Apple, AAPL. And when you come on stock charts, this is the basic chart that you will see. Sorry for the ads. If you don't have an account, they flash lots of ads here, so I apologize for any of these that show up. Essentially, it gives you the RSI, a 50 and a 200-day moving average, and the MACD. So the first thing we want to do is remove some of these features. All right, so the moving average, I want to change that to an exponential moving average.
Oh, he's a singer.
And the 200-day moving average, I want to delete by taking none. All right, so if we hit update that, you'll see that the moving averages have now changed. All right, the next step is to change the indicators. So I'll take both the RSI, go up here, you select it, hit none, and then the MACD, you go up and select none, and you hit update, and you'll see a clean chart, and that is pretty much just the candle chart and the 20-period exponential moving average. So let's add on the indicators that I use. The first is relative performance, and it's set up in stock charts. So you go down and you select the price, then you'll see over in the parameters, it's comparing the price to the SPX, which is the S&P 500, and position that indicator below the chart. So if we hit update here, we'll now see the relative performance. Those of you who are a little quick refresher course on the relative performance measures the performance of any stock or ETF against the benchmark, which is normally the S&P 500 or the Spider Trust. So why is this important, you might ask? Well, in an up market, which is the only time you should be buying long positions, long positions in stocks or ETFs, you want to find those stocks or ETFs that are acting better than the overall market. They're outperforming it. The reason in a strong market like recently from year to date, for example, Apple is up 20%, but the S&P is only up 12.8%. So that's essentially 7.2% of positive price performance if you'd happen to buy Apple at the start of the year instead of the S&P. And that's indicated by this relative performance chart, which is in a clear uptrend. Also, when the market does pull back, those stocks that have a positive relative performance or relative strength will usually fall less than the overall market. Of course, just because the RS is falling or flat doesn't mean the stock can't go up. It just means it's going up less than the S&P 500. So the next we want to add is the on-balance volume. So you have on-balance volume, you go select it here, and you hit update, and you'll see, and then we'll see the on-balance volume. Okay, it measures, it's a cumulative volume reading of the volume. So if the prices close up, in this case on a daily chart, on a daily basis, the volume is added in, if the price closes down, the volume is subtracted out from that cumulative total. So what you look for is for changes in that trend. For example, in these charts, even if you have a free subscription, you can go to Annotate and pick a color and pick a line style, and then look at, you can see sort of a downtrend here in the unbalanced volume that was broken, in January, and also the unbalanced volume formed a positive divergence. It made higher lows while prices were making lower lows. And then you can monitor both of these indicators for their trend performance. And, if you're in that stock or ETF, you can see if that trend changes. So we'll trash those annotations, but you can play around with those. If you have, I think their cheapest price point is about $15. And for that, you're allowed to save your chart formations. So each time you come on, you have one list of various charts you can take a look at, and trying to get out of annotation here. There we go. And that makes it convenient. Another thing, and the reason I tend to use stock charts more than I use the other platform, is that they have quite a bit of advanced decline data that other platforms don't have. So for example, we'll do a quick run through here. The $ NYAD is a symbol for the advanced decline line. But before I can show this on their chart, so if I update this, it's going to look pretty crazy looking chart. Okay, so we have to clean it up, because this, to view it as an advanced decline line, you have to look at not as a candlestick chart, but as a cumulative. So if we hit cumulative, then we see an AD chart. And of course, they're comparing it to either the S&P 500, and there is no volume in the advanced decline line, so neither of those indicators is useful. But this gives you the NYSE AD line, which you can see closed at a new high last week and is broken out of that trading range. So that's an additional thing that you can do on stock charts that is not available on many of the other platforms. And so it's definitely, I think, is a positive factor. Okay, I got a request to turn up my volume a little bit. So, all right, okay, all right. Let's see. Now, anyone else questions about this? Doesn't look like it. Okay, great. I am recording it. I'm pretty critical of myself, so that I will watch it. If it passes my muster, then I'll distribute the recording as opposed to doing a second session on this. So I will mail out the link to my general mailing list, and so you'll able to watch the tape. Also, as will be the case with both these platforms, if you have questions or problems, you can email me at tom@viperreport.com. And if you come up with a chart and you think that your chart doesn't look like my chart, then put chart in the subject line, and then if you can, attach a copy of the chart. So if you want, for example, if you right click on this chart, you can copy it, or you can email it. So that'll allow you to send me a chart. And I do get back to all of your inquiries. My schedule sometimes is pretty crazy, so I admit that I may take 3 or 4 days to get back to some of you, but I will get back to you. If it gets much longer than 3 or 4 days and you haven't heard back from me, feel free to email me again and give me a bad time. All right, so let's move on to the other platform, which is called freestockcharts.com. I'm doing this session in Internet Explorer because you can run stock charts in pretty much any browser, I believe. but you can only run freestockcharts.com in Windows Explorer. That's because it requires a video application called Silverlight. So if you don't have it on your computer and you go to, and you can see the site up here, www.freestockcharts.com, and you hit run free version, it'll check to be sure you have Silverlight. If you do not, you'll have to they'll direct you to the Silverlight platform where you can download and install it. I know some of you might be cautious about this. It's been around forever. It was used early on in Netflix applications, so you could watch their movie streaming. So I'm very confident it won't cause you any problems. Just be sure you go to an authorized site, and maybe an email I'll include that. Be sure it's a Microsoft site, and it's it's okay. So they have a free version, premium version. You can also use this apparently by installing their TC2000 product, which I guess starts at $19.95 a month, and that runs either in the web or off your PC. So let's hit run the free version. All right, so first of all, this is kind of a completed set, so we're going to want to go up here and create a new layout. We want to start from scratch. So basically, when you start out, it'll start out with a chart like this. Okay, first of all, it's a 10-minute chart, so it give you delayed intraday. We want to go to a daily chart. All right, that's the first step. I'm going to increase the size of this window. And once again, we'll also look at Apple, so you can look at how Apple works in this platform. All right, and then we want to take off the volume analysis on the bottom. All right, so we have just a plain bar chart. We'll look at the price history here. We want to edit that. So instead of a high-low bar chart, I prefer to look at candlesticks. All right, so we have a candlestick chart. And plain candlestick charts. And then you want to add an indicator. Well, first of all, it's price history here. Add an indicator. We want to add that 20-period moving average. So you have to do that under the price history pull down. Moving average. All right, default moving average in this blue is a 50-period moving average. Okay, we want a 20-day and we want an exponential. So we need to edit that. So if you hit edit, most of these have a right click. So we have a plot style, plot color. Let's change that to red, which is what I typically use. And we'll start lowering the moving average. You can see as I do this, the moving average becomes shorter, and you can see that it's sloping up more sharply. That's because the stock price has been rising pretty nicely. $20-period exponential. Okay, so changes to exponential. And I think I'll go for a little higher weight line. You can change the line to be as thick or as thin as you want. And then, okay, we have a bar chart and we have the 20-period EMA. Those of you who get my publications will know that I often tell you where the 20-period moving average is, and because it's often asked like a level of support. So if you're seeing a market that's strong, you'll often see a pullback to that 20-period EMA that can often set up a good buying opportunity if the other technical studies are in agreement. Conversely, in a downtrend, such as the case in early December, all the rallies failed at that moving average. So one really simple charting technique is to look at where that 20-period moving average is rising or falling. Okay, well, let's add an indicator to this. So we add indicator. We go down. We have, it's listed in this platform under relative strength, not RSI, relative strength. And it tells you here, this is the relative strength versus the SPY, which is the ETF that tracks the S&P 500. Okay, so that looks fairly similar to the other one we saw. In this platform, it allows you to add a moving average. So we can go add indicator and moving average. Once again, it's defaulted to the 50 period. So we want to edit that. I'll probably leave the colors the same, or you can change it to whatever, you can change it to red or green, pick whatever color you would like that you like to see it. And once again, we're dialing this down. All right, on the indicators, I run a 21 period front end weighted moving average. Now, for those of you who use stock charts, you'll have to use an exponential moving average because for some reason they don't allow you to run a weighted moving average. There's subtle differences that I won't go into, but essentially the front weighted moves a little slower than the exponential, but it'll still give you the same trend. Okay, so we hit OK. So now we can see in blue we have the relative performance, and then in green we have the 20 period EMA and of that relative performance. So that looks all good. Let's add another indicator. So if we go down here, we're looking for the on-balance volume. Okay, there we go, on-balance volume. It shows up here in gold. And once again, we want to add an indicator to it. So we click on the pull-down arrow. Everyone see where I got that? It's right on this arrow here. And you click on it, and it gives you this sub-menu. So we want to add an indicator. We want to add a moving average. Okay, it defaults to 50. So let's edit that. First of all, I want to change the color. Something that's a little change the color up here to maybe something like a goldenrod. Too much similar to the chart. So let's do something else. How about a yellow? Okay. And then once again, we want to change this down to 21. And we want to change from simple to front weighted. And OK. All right, so now we have the indicators that I use in one of my other platforms pretty much. The relative performance is 21 period moving average, the on-balance volume, and the 21 period moving average. In this platform, you can easily go from daily to weekly, okay, and you can see how that's changed. Both the on-balance volume, are both above their moving averages, which are trying to turn up. And of course, the chart change has gone from a 20-day moving average to a 20-week. And at the bottom of the chart, you can, move it closer, look for more history. Those of you who are trying to learn more about the market, I think that's a real advantage, is to look at how the indicators performed in different periods. You can see that, from 2017 up through a good part up until last fall, the on-balance volume was above its moving average and was quite strong, and that was a bullish sign and a bullish trend for that stock. And it also can be same for the relative strength. Part of the goals I do in both the Viper ETF and the hot stocks is to try to educate you on the markets so you can learn about them and become your own expert, which I think is possible for all of you. It does take work and time and concentrated effort, but it is achievable. So that's pretty much how the indicators look here. Of course, you can also go to, I think, and maybe you can look at it, an hourly chart, get the same sort of thing. The indicators are less valuable for the most part on hourly data. The RS is fine because the SPY is quite liquid ETF, so that's the main variable. Volume data hourly on a stock like Apple is quite good. On a stock that does not as active as Apple, you do have some issues that you need to be aware of. So bear that in mind. So let's go back to daily. And as I said, once before, they each have their own features. This is one of the features of free stock charts. It shows you all the percent changers from Friday's session. So like CarMax was up 9.6%. You can see it had a pretty bullish gap, pretty bullish technicals here. But once again, it's quite a ways away from, its moving average. Celgene, drug stock, also strong. Micron Technology, chip maker, trying to turn positive here. You might want to, what I would do is, I start pretty much my analysis every weekend. I do spend most of Saturday and Sunday doing analysis, and I really start with the weekly data and use that as an initial screen. This is Seagate Technologies, another chip maker, which is also looking kind of interesting. And from that standpoint, then I go to the daily data to see what opportunities and ETFs that I can find for my clients, for myself. And that's pretty much, the basic how I use this. And of course, if you have the paid version, they give you a lot more choices about screens, scans, etc. And both the platforms are quite robust. So I think that, I think being able to run the moving averages is quite an advantage to my way I look at indicators. So, if you're using the free version of both, I frankly have not used a paid version of that 1995 package for a number of years. So I can't really compare it to the paid version of stock charts, which I do use in my mentoring and my training. I tend to set up a lot of things on that because most people have the capability to follow along. These platforms do probably 80% of what some of the more expensive paid platforms do that I also use. But for most people, they're quite advantageous. So if somebody wants me to look at SQ, good old square. Okay, let's look at what square looks like. Okay, so maybe we'll, you can see that, it's below its moving average and its moving average is flat. So chart interpretation would say that this is either a trading range, or a top. You can look at, this is the 7110 was the low on this bar. If you click on a bar, it'll give you the price action. So if it drops below that 7110, that would not be a good sign. It would complete that. Pretty much the RS is negative and the on-balance volume is negative, both below the moving averages, and their moving averages are declining. We can go to weekly, see if we see any rosier picture here. On the verge of crossing here, still positive in the on-balance volume. So you're kind of in a range. You can look at the weekly. I often base stops on weekly charts, so you can see that 7110 low, and you can see the prior high at 8278. That's the high. So quite a wide range there, meaning quite a bit of risk. Someone's asking me whether the SEC commitment of traders reports. No, I don't believe. I think stock charts may, frankly. I use TradeStation and Trade Navigator, both of which are great, and both do have that commitment of traders data. I can be quite, some of you read my articles in Forbes.com where I'm a contributor, and I've seen how I use that to see when, for example, at the crude market low a while back, it was really, traders were way too bearish on crude oil, which makes you look for a change in that trend. And currently, traders are quite negative on the bond prices. So that's be something to watch. All right, that's all I pretty much have prepared for today, if you don't have any other questions, couple things. I'm going to be doing more of these, and I appreciate those of you who filled out the survey. The survey, about 80% of you favored sessions on charting, pivots, overbought, oversold. So we're all above 80%. So I will hopefully put together another survey to follow up on this presentation and include the course as well. Still, I'm planning on keeping these, moderately short. Hopefully that'll allow me to do more of them, but probably, average around 30 to 45 minutes. This was the most popular time slot by about 10%. I appreciate you attending today, and I hope you found it beneficial. Once again, any feedback, send it to tom@viperreport.com. With that, I'll close in the meeting, and again, thank you very much.